All right, we are here on the new Digital Perspectives channel. We did some rebranding here, but I'll tell you what we didn't do is we didn't change our Fridays. JHyatt and Cryptopolis on the show. Guys, how are you this morning?
Fantastic. How you doing, Brad? Doing well, man.
I'm doing a lot better now. You guys are here with me, and I love knowing that you guys are safe and your families are safe, and that's a great thing. And we are off and running. Now, there's been a lot of information, a lot of things coming out lately. Where do we start here? Do we want? I think where we want to start is, and Jay Hyde, I'm going to lead off with you on this. Let's start with Christopher Giancarlo, who's really come out of the gate here and been very vocal, releasing that paper about the digital dollar, or not the digital dollar, but XRP not being a security but a currency. Speak on that, Jay Hyatt, for a second.
Yeah, I think we all, as members of the community, have understand the importance of any good paper coming out defending XRP as not being a security. But I think that the how specific he was in determining, the Howey test points, and himself as who he is, his professional reputation, and all the connections he has in government and everything else. For him, somebody of his stature to come out and say the things he said with such specification, I think is really, really, it can't be understated for the community and for Ripple and for XRP in general. It was a huge paper, and I think that in the long term, it may be a point of contact, of a definition point, a place we're going to springboard off of for any future questions about whether or not XRP is security.
Well said. And I want to highlight, to your point, you're absolutely right, the professional integrity of somebody like Christopher Giancarlo to come out with such a bold paper. I mean, not only, as you pointed out, the former chairman of the CFTC, right, but legal counsel on Wilkie Barr. Wilkie Barr is also legal counsel to Ripple. He point by point goes through and just slams the thing against the Howey test, calls it a currency. The other thing that really just kind of really hits home for me to the weight of what he put out as his professional opinion here, he's the head of the Digital Dollar Project, Dave.
Yeah, he is. I mean, so why was he put in charge of this digital dollar project? Was it a personal interest of him that turned into a professional interest? And there was also a number of people who obviously supported him in this, project. So he's got the support probably of the Fed, the Treasury, the president. I mean, he's got the support in order to lead this project. And he must have also had an extreme personal interest. You can tell from when he talks that he knows this is the future. And so he's doing what he can to push this forward.
It's a great point. And I'll tell you, he just recently, of course, round one in Congress for the digital project, I believe, was in front of the House. And then just a couple of days ago, he did round two. He was in front of the Senate. Some very, very good back and forth went on there in the Senate. And I must say, one of the things, the exchanges that really just lit me up and pulled me up in my seat was with Senator Tom Cotton. And if you didn't get a chance to see it, I'll just break it down really quickly. So Tom Cotton asked him, and he said, actually, he framed his question and his conversation with Giancarlo as to say that he saw a huge use for the digital dollar outside of the United States, more so than immediately inside the United States. And the conversation quickly went to commodities. And Giancarlo highlighted that he was, obviously from the former chairman of the CFTC, and said, most commodities in the world are priced in USD. And in fact, that's why you're seeing these other governments and countries get a central bank digital currency together, so they will be able to purchase these commodities on the new system. And I'm paraphrasing, but that was the gist of what he's saying. And I just lit right up. And then he remarked even further that soybeans were already on blockchain.
Well, who's the biggest buyer of soybeans in the world?
China,
I mean, there's a war going on, and we don't even really see it.
because the war is about the issuance of digital currencies backed by a central bank of each country. That's going to, which one is going to dominate is the war. And so you've got the Chinese creating their central bank digital currency, and you've got the United States, looking to do the same thing with Giancarlo being the head of that. And so there's a war going on. And so it's really interesting. It's very fascinating that right now the US dollar is continues to be the world reserve currency. But what happens when another digital currency, when it comes out, becomes so widely used that it has to become and designated the world reserve digital currency? And so this is the war that's going on right now. It's really the Chinese who have I think they have opened a can of worms here that they can't put back in, and they're really bringing awareness to the United States government. And the reason why Giancarlo is ahead of this digital dollar project is to get this thing going, because they realize that there is going to be a digital world reserve currency, and it better be the United States.
It's so well said.
I had a conversation with a couple of friends of mine last week about the U.S.-China relations, and my point was that we've come so far since the early 1900s as the world, and regarding weaponry more than anything, is that it came to the point now where anybody, any country, any major country, they have the weapons to demolish huge portions of other countries at any given moment, right? And that's true for anybody, right?
Sure.
So I think that it's come to a point where learning from the past, that no one is looking to do that type of damage in a war setting, because it doesn't ever do anything for anybody positive. There's death, and it's just, at the end of the day, it's all about power. So we've shifted from a physical war to a technological war, and the biggest gatherance of power is by money. So now we're in a financial war, we're in a technology war, and it's whoever ends up being the controller of currency is going to be the one that's making the calls. You know what I mean?
Yeah.
Whoever the winner is writes history. That's how that goes, right? So we're seeing it in the last election. We're going to see it come up now. I know that for sure. That you're going to see it's technological warfare. Everyone understands the price to pay for physical warfare never is worth the cost. What you get out of it, people die, and it's horrible things that happen. So now we're in a war of financial. And we're trying to win that race, and that's the 21st century war we're in now.
That's a fantastic point. Is that in generations previous, in centuries previous, that the only way to really to show power, to gain power, is through physical warfare, through that kind of by taking land, or by taking over another country, or by destroying that country in order to take over the resources of that country. This is a great point, because now you don't need to do that. All you need to do is control the assets. And the more assets you can control, the greater the power that you have. And that's a really fantastic point. I love it.
That's the biggest thing that we've seen with SWIFT. That's why BRICS is coming around. It's the same thing with SWIFT. Is that the U.S. has veto power regarding SWIFT or not SWIFT. The IMF, the issuance of IMF SDRs, right? The U.S. Everybody wants to have IMF or SDRs issued, but the U.S. has veto power, and we don't want certain countries to get any SDRs. So no, we're not going to do that, and that's what everyone's trying to get away from, And in the past, the U.S. is able to impose sanctions on countries to not allow them into SWIFT, the wire transfer system. So, and that cuts them off from being able to do business, most of their business. So that's power. That's power we've had for a long time as the reserve currency. There's a lot of power, and that's why we don't want to lose that, as a country.
I think you two are making the greatest point about what today's conversation and the current climate really are. This is a monetary war. We've heard the old adage, he who has the gold makes the rules. And, you combine that with where we are today, he who has the technology controls the gold and the assets, and they make the rules, right? And that's really where we're at. It's a fight. It's a technological monetary war. You guys are nailing this. Go ahead, Dave.
Well, when you think about it, since the beginning of the internet has really decentralized communication, because you can knock out a city, you can knock out an entire country, but the communication continues because of the internetworking of all those computers. And that's how DARPA set up the internet in the first place, to communicate with universities and the government and other government agencies in case of a nuclear attack.
Yep.
Gets knocked out, everything else continues to work and communicate with each other. And so now when you have a digital currency, knock out a digital currency with an atomic bomb, it is there is no physical warfare anymore that can destroy a XRP, a Bitcoin, an XLM, or any other digital currency, because even if I have it on my computer, you've got hundreds of nodes, thousands of nodes all over the world that have a copy of that ledger. You can't knock one out and just wipe it out.
It's the power of blockchain.
Not with previous to that, you could knock out a city, you'd just come wipe it out, or you'd be able to take it over militarily and you'd have those assets. Well, you can't do that with digital assets.
I mean, this is such a fantastic point. It's exactly what the macro notion behind everything here is. It is exactly what's driving the overall idea of blockchain and cryptocurrencies.
And decentralization, absolutely.
Decentralization, that's exactly right. And you guys are absolutely crushing it. And I want to go back to a point that was made to reinforce this idea of exactly what you guys have said, talking boots on the ground, going back to the congressional hearing with the Senate just a couple days ago. Tom Cotton also referenced in that same exchange with Giancarlo that not only was China ahead in working on the digital currency for the yuan, but they've got a basket of currencies with the Asian region, and they have a currency in, I think it was in Korea, and then another, and then, it's like several countries have put their currencies, digital currencies, in a basket to work along with the Chinese yuan. And this goes to show the positioning and the pivoting and the posturing that's taking place to do exactly what you guys are talking about, and to really, what they want to do is work around using the U.S. dollar. That's exactly what we're talking about here. And Tom Cotton opened up his discussion. This is a guy who gets it, okay? He really gets it. He opened up his discussion and said, and I'm paraphrasing, but the paper dollar, if we're not careful, could basically look like the flip phone in 2006. It could look like, the Blockbuster video store, right before that fell out, or the horse and buggy in the 19-teens, He really understands where the technology is today and what it means to the analog dollar that's out here in this world. If we want to get the commodities market, which Giancarlo admitted in the next 2 to 3 years, it will all be done this way. I mean, to me, it sounds like what I came away from the exchange between Giancarlo and Senator Cotton was simply this, is that the other countries are making these advances and releasing their CBDC now, and the U.S. is not, in fact, dragging their feet because they're well aware of it. In fact, they were explaining the narrative in a congressional hearing with the Senate just a couple days ago. Go, guys.
One of the reasons why Cambodia is so intent upon creating their own digital currency is because of the close ties that they have with China. Mm-hmm. And so if they want to do trade with each other, it's really important for them to have their own digital currency, because they know China's going to do a digital currency. They need to be able to exchange. Yep. They have an exchange rate between those two digital currencies. Thailand also, they're very, very strong on, creating their own digital currency. I think a lot of the Southeast Asian nations are probably more interested in creating their own digital currency. Cambodia in particular, because they don't have a viable local currency. Their baht, their currency, their local currency is practically worthless, and they've been using U.S. dollars to drive payments in locally and with business to business for probably 30, 40 years. Wow. And so their currency is absolutely worthless, but they're having more and more trade with China. And so they have to have that digital currency in order to be able to exchange. Now, this is incredibly fascinating, because what you're really talking about here is the old monetary system and a new monetary system. And here's how I see this playing out. We have the Federal Reserve buying up the bonds of companies in order to bail them out. And they've been doing it now since this whole situation has happened. And so as this continues, we see the Federal Reserve adding to their balance sheet corporate bonds from Apple, Toyota. Why Toyota? Why a Japanese company? Mm-hmm. All of these, it's just amazing, the list of number of companies that they're holding corporate bonds for. And so now, what are they doing? What are they really doing here? It looks like they're archiving. They're like putting it into a basket where they can say, okay, well, we're just going to let it sit in that basket while this new monetary policy takes over and a new digital currency takes over. And they're just going to say, hey, that was the old economy. Now there's the new economy. And if we're talking about, and we mentioned many, many times about a financial reset, it's not going to be a single day event. It's going to be this process of the Federal Reserve basically buying every single company. In fact, they're helping Apple besides. Now, here's the thing that kills me, is that Apple has $50 billion in cash, but the Federal Reserve is buying their corporate bonds. Why?
Yeah, why?
Because they eventually want to control all of these corporations. And so you've got this archiving, you've got this kind of sequestering of assets in the old monetary policy, and they're going to start rolling out the new digital monetary policy, which now, because they own most of the old ones, they want to control the new ones. And so there's no way on earth that they're sitting in meetings and they're talking to each other and they're saying, I think we should just use the digital yuan.
No way.
I don't think so.
No way.
That'll happen.
Yeah, we're not going to watch them circumvent the U.S. dollar.
And that's why they're printing so much. That's why the Fed is buying so many treasuries at this point. They're just soaking up every single dollar from the old monetary policy, old rails. And they're just saying, hey, we're just going to throw it in this basket and we're just going to let it sit there. In the meantime, we're going to roll out this new digital policy.
Go ahead, Jay.
Think of it as taking cash and turning it into real estate, turning it into something fungible. Yep. that will be able to surpass any devaluation or any current. So it's like, okay, I'm going to take, like you said, Apple's $50 billion. The Fed prints that in the afternoon. What the hell do they care? $50 billion. They don't care. Imagine having unlimited funds to buy whatever you want to buy. That's why, the guys can be a little off the wall with that. I listen to him all the time, and he says, the Fed's turning into the buyer and the seller, or the buyer and lender of last resort, because they want to own it all, right? For this changeover. Anybody that tells you that the U.S. is behind the ball on this whole thing, go look at an old Stewart XRP video or whoever showing you that Brad Garlinghouse in meeting in 2016 with the White House, with Trump and all that. Come on, they're not behind. It's like you have this great technology, you have this way of, and I think a lot of it has something to do with regarding the U.S. debt. I think that there's something in that too, in this whole thing. But I think that it's got to be not only great for the country, but it has to serve a political purpose at the same time. When the time comes when it's going to be most beneficial for the current regime, that's when we're going to find out what's up. And I think we're getting close to that because I've been preaching it for 2 years that come election time, leading up to, he needs a lot of positive press. And what is going to be better than a plan to pay off the debt for the country and whatever else they got going on with the digital dollar and how they're have been playing this and all these positive things with the digital dollar, and because it's a concern for a lot of people, and I think that you're seeing the Senate and the House all of a sudden becoming the conversations are becoming a lot more advanced from the Bitcoin days. It wasn't that long ago, right? It wasn't that long ago.
Just a few months ago.
Just a few months ago.
That happened. Now you're having like you see either the education of them at a rapid pace, or they were playing a little possum, and now they're showing you kind of showing you the hand a little bit now. And now we can get into it a little bit,
Well, one of the reasons why the Federal Reserve doesn't care how much money and the Treasury is printing and the Federal Reserve is printing and leveraging off of that is because they know we're at the end of that monetary system. They could care less.
They know it.
To prop everything up, and so as soon as it was a couple of weeks ago, and I talked earlier as soon as we started to see this 19 thing take off, is that I preached that there was going to be a 1929, 1932 playbook with a depression and a deflationary scenario. Just to update everybody, that's off the table. Hey, Jerome Powell came out and said, "Hey, look, we're going to do whatever it takes," and so they just said, "Hey." So the thought across my mind is that they don't care. They know that they're at the end of that monetary policy era, and they're going into a new one. And they'll just print until the election time, and after that, they really don't care because we'll probably at that point already be on the new digital dollar system.
You guys are making such an amazing point. Watching the Fed bury their money into these companies, potentially to avoid the devaluation of currency by being into assets and investments, as in just cash floating around, right? Now, I want to build on this notion and the other thing I wanted to say too is that Senator John Kennedy made a comment that the Senate is very good at deliberating. It's one of the things that they do best. And that's always obviously behind closed doors, right? The deliberation that they really do. And that's something I think we need to preface all of this too. When we see these public hearings, whether it's at the House or whether it's at the Senate, it doesn't matter. But what we see publicly is a fraction. It's the tip of the iceberg of the real conversation that's actually taking place in the closed door sessions or when they actually go away to deliberate. So I do want to remind people of that. But to your notion, guys, of what we're talking about here, about the dollar, the potential at some point of seeing a devaluation, understanding that the Fed is just pouring tons of money into corporate bonds and investments and things like this. USG, U.S. gold currency, rears its head. Now, I want to remind everybody that GGC is a gold currency that has been created for use on R3's network about a year ago. So this isn't the first one on the scene. However, I'm going to see if I can share this with you guys. You guys tell me if you can see this, because I think I can make it so you guys can see it and everybody in the audience as well. But this goes well with our conversation, and let me know when you guys see that. You guys seeing that?
Usually I get a pop-up saying that you're sharing your screen, but I don't see anything.
Okay, so I'm sharing it through the template. It'll record for the audience. But what I'm showing people here, guys, is that convenience of digital money, the security of blockchain, and the stability of gold. And basically what we're looking at here is the U.S. gold is the issuer of the USG token. Each USG is a digital asset and direct representation of the American Eagle 1 ounce gold coin as minted by the United States of America. Now, what's fascinating about this is that there's 10 million in market supply. There's currently in current supply 100,937 in current supply, and the current price is sitting at $24.25. Now, a couple days ago, it was at $23.75, and it says it's very stable at the current price right now. The other thing to note about this is that this token is for supply chain trade, okay? And it's being implemented and used in Africa, India, the Middle East, and one other market area. And it's exciting that they're doing this. And I can't remember right this second, but it shows the difference of stability on a diagram here between Bitcoin and Ethereum, with gold, their gold token being very stable at the price that it's at. And the other thing I wanted to highlight here is that they're licensed out of Wyoming with a money transmitter license, and they are registered with FinCEN and the Treasury, guys. It's like this is a step in the right direction for where we are going. I think all of this really adds to the point that you're talking about. This is a monetary war that's taking place globally, a push for power and strategy when it comes to the CBDC. Look at China and the digital yuan. They want to take the lead in the innovation out front. Now we're seeing the gold tokens make their way of being tokenized, registered with FinCEN, backed, by the Treasury here. I mean, with the, American Eagle 1 ounce gold token. And by the way, the value of this token is stronger than the value of the 1 ounce Eagle, by a few $100 here. So I guess the larger narrative here that I'm getting at is that we are seeing collectively this new system that you guys are talking about. It's rising up right out of the surface here. I mean, you're seeing gold coins being used for supply chains in these 4 different regions now, right? Oh, Asia was the other market. So Asia, India, Africa, and the Middle East is where they're starting with these gold tokens for supply chains on a new blockchain network, right? And everybody's making a CBDC, to your points. America's getting ready to do a digital dollar. Let's face it. I think it's already done. I had somebody from Australia tell me that Australia originally thought it was going to take them 5 years to do a CBDC. It ended up being a 3-week process.
Yeah, that's really interesting. But you have to think about why would they do this in the first place? Why are they doing this with gold? Why are they using assets? And really the answer is because that's what people are demanding. I mean, I saw a really interesting talk by one of the directors of the IMF, and it was just a few days ago. And he went through the entire history of money and currency. And he said, as times change, you have to change with the times, and you have to be able to create the type of currency and the exchanges that people want to make. If they want to exchange shells for furs or something like that, well, that's what the currency is. And if you want to use greenbacks and exchange those for whatever you want to buy, then you can do that. And now if you want to use XRP to purchase something else like Ethereum or exchange between digital assets, or in this case gold, you have to be able to change with the times. Otherwise you're actually going to have a currency that you can't exchange for anything else. And one of the reasons why I think gold is so important in this entire picture is because everybody recognizes that's real money.
That's right.
It is the thing that everybody has relied on for thousands of years as being real money. And so it makes a lot of sense that it would be backed by, a single 1 ounce eagle would be backed and tokenized. And what does that mean for the digital dollar? See here, why is that even necessary to use gold as the standard is because all of the currencies in every single country in the world has been printed almost to infinity, and the devaluation of every single one of these currencies has created such a valueless currency in each of these countries. Who was it recently? Which country was it? I think it was Lebanon, who saw a 50% decrease in the value of their currency overnight. Overnight. And the government will not allow anyone to trade in any other currency. And so they're destroying their economy, and people who want to trade in another currency besides Lebanon, whatever currency it's called, are are deemed illegal. It's illegal, and so they're not understanding the demand from citizens to use a different type of currency than the one that is issued by the sovereign, right? And that will eventually destroy them.
I have to say, you guys are so killing it today. It's amazing. The thing one of the macro things I thought of when I saw this, registered with the Treasury, this gold token on the blockchain, right? And it's redeemable for the physical gold eagle coin, and it's all, it's all right there. It's minted. Everything's there, right? It's a limited supply, it appears like.
Organic. If I was as a United States citizen, I'm thinking, hey, it's gold back. It's on the blockchain. It's verifiable. I don't have to trust the government in order to actually invest in this. It's a no-brainer.
It is a no-brainer. And the other macro thing I thought was, and obviously it's a little more fringe, but I couldn't help but feel like, wow, with only 10 million of these things minted, it's obvious that they want to drive the value of this token to be used up for supply and trade and these things. I started thinking to myself, wow, is this how we really start to begin to drive the price of gold up? And because we're preparing for a devaluation eventually for these currencies that are taking such a hit? I don't know if that's the answer, but at some point, even the Fed has got to pay the piper, right? And I think they know it, and that's to your point earlier. That's why they're burying investments and buying these corporate bonds and basically hiding the printed money inside of companies to take less of a hit than just having the cash floating around the world. And okay, so let's go to another point that we've been on here, and that is that we touched on the fact that Christopher Giancarlo calls XRP currency. And we know that its job is to be a bridge asset and to settle between the exchange rate of the fiat world. And obviously it can do that with anything that's tokenized asset of value as well. But for the sake of conversation, we'll focus on the fiat for a second because of everything that's going on. This doesn't work if it's a commodity sitting in the middle of everybody's fiat. There's tax implications on a commodity that if it's a currency, look, if you're going to settle between two currencies, wouldn't it not have to be a currency too? I think it's quite obvious.
Yeah, absolutely. So, the way Forex works now is you're trading one currency against the other. And so it's currency to currency. If Giancarlo's point is really interesting, because if XRP is a currency and deemed a currency, then you've got this exchange from XRP to the Swiss franc, and then you've got, if you want to trade out of the Swiss franc and go into something else, you're basically trading the XRP for a currency and then going into gold. And so you have no taxable event there until you get into the gold and sell the gold or whatever you want to do with it, right?
Absolutely.
What's interesting is that when you have a fixed asset like XRP at 100 billion, and you've got the Swiss franc that has 72 trillion Swiss francs out there, the 100 billion, like Jim said earlier before we went on, he said that sounds like not a lot. That's not a lot of XRP, 100 billion compared to 72 trillion of Swiss francs being traded.
Yeah.
Any other currency, really, just about any other currency. I don't know exactly what the smallest country's currency is outstanding and floating at this point, but I'm sure it's more than 100 billion.
It's easily, right? Easily. And, to your point, Chris Larson said back in, I think it was January 2020, and I just played a clip from DAI's video the other day to remind everybody from it, and shout out to him. But, the idea from Chris Larson was, in that particular conversation he was having, is that XRP would have the liquidity of, let's say, a Swiss franc, which has 72 trillion in circulation apparently right now. And I mean, it's kind of staggering, when you think about XRP having the liquidity. Even Miguel Villas has commented in years past, back in, I think, 2018, when he was still, I mean, obviously he just left recently at Ripple, but shout out to him. But he even remarked that he didn't want to take a break until XRP had the liquidity of a G10 currency, which is massive, massive flows of liquidity.
Yeah, absolutely. And when you think about it, what happens to a fixed asset like XRP against a fixed supply against a currency like the Swiss franc or just about any other currency in the world, in which they're continuing to print on a regular basis? What happens to the value of that fixed asset against an asset that continues to be pumped and printed in just to oblivion?
Oh, yeah.
If you're going to use that as a currency in order to exchange with another currency, that fixed asset has to go up in price.
Oh, it's an excellent point. So, okay. So, and then we'll do this too. So now let's go from the idea that we all understand that, this is the ultimate end goal for XRP, as well as the digital dollars pursuit and these things. How do we technically get there, right? It can't just be us YouTubers and influencers, right? We need real things to take place for this to pave the way. So let's have that conversation now. So, okay. So recently, Brian Brooks became the head of the OCC, the Office Comptroller of Currency. He said just a few days ago, about a week and a half ago, at the podcast for, I think it was the American Bankers Journal, shout out to them, and he had remarked that he is going to be releasing and putting together a federal charter that he will put out in the fall of 2020. That federal charter will allow companies like virtual asset providers, I believe, and companies, I would imagine, like Ripple, to begin to engage the Fed in areas that they feel that they could solve a pain point or a problem. It would give them access to do so through the federal charter, as well as it's going to eliminate this 50-state separate licenses, different regulation hurdles in each state, and the hindrance of that. And most of these companies, let's face it, don't have the capital to pursue licenses in all of these different states, and that's why you don't see them in every state. So there's another implication to that too, and that is that we got banks in all 50 states, and we get a federal charter that allows virtual asset providers or service providers to begin to operate in all 50 states, and we've just put a huge incentive pressure, business pressure on the banking industry, that now virtual non-financial institutions are going to be able to come in and start to play around in a world very close to yours, because they got to be KYC, they got to be AML, they got to be CFT, travel rule compliant, and that's all these things that are very similar to the compliance level of banks. So it wouldn't be out of the realm to see just that opening the door of that aspect of this federal charter that pushes exchanges to say, hey, maybe I want to start offering a product or two that's like a bank, and I can apply to be licensed to do that as well. And then maybe the banks say, well, hey, if they're going to be in my backyard, maybe I want to start offering some kind of digital portfolio through maybe even a third-party mutual fund or hedge fund, because of the relaxing of the Volcker rule. And maybe I can now offer this product to my client base, right? And then there's two other huge incentives of the federal charter as well, which is not only does it allow them to engage with the Fed, but it also will allow these non-financial banking companies to pursue the protection of being FDIC. Now, that's going to bring a huge amount of confidence from businesses to adopt this new system or this new offering or new tech, right? This is going to be a huge customer draw for people to want to come in and work with that particular institution on whatever that service is, if it's applicable to them. Talk about that for a second, guys. This is boots on the ground stuff here that's happening, right?
This has been the caveat for me for a while, and it leads into what you're talking about, is the incumbent banks, right? And this goes right along with the delay, the constant feet dragging of the ISO 20022, right? This is, they have to figure out a way for the incumbents to be able to cash into the new system, right? So there's so much money been made over the last 30, 40 years, the SWIFT network. There's been so much money made in cross-border payments and wire fees and all the hops. There's been so much money there. Companies have made their living off of it. I mean, it's ridiculous, So now we have this technology that is able to eliminate the need, more or less. We have it. It's been there. So now let's figure out a way to, because the people there's some heavy hitters that are involved in the Bank of Americas and the JP Morgans and all them big conglomerates of banks, right? So what, to your point, how do we get them paid in this whole system, right? So now here we go. We're going to allow the FinCEN companies partial banking services. And in that same respect, we're going to allow the banks the ability to offer a digital asset portfolio or have their clients be able to go that way. Look at Bank of America just recently, right? There was big news that they're allowing purchases of Bitcoin on their credit cards, but only basically what they're doing is that they're treating it as a cash advance, right? So they can whack you some more fees for the Bitcoin purchase. That's all. Everyone's all excited. Oh, I can buy Bitcoin on my card without any problems. No, you could do that before, but now they're just treating it as a cash advance. So now you're going to pay the shot. If you want to do that, you're going to pay. We're going to make the money off that in the meantime while you're doing that, So there has to be, everybody has to have the hand washing going on. One hand wash the other, right? In order for this to really flourish, the big wigs got to get their money, right? So that's, you can see it, as much as they want to show publicly the frustration of Marcus Treacher and all them, and in the articles they show about the dragging of the feet and the ISO 20022, it's like everyone's basically, there's thousands of companies ready to push into this new system that was supposed to happen this year, but now there's a couple places here and there that aren't ready. We're not ready. COVID, it's a perfect excuse why we're not ready, all that stuff. And yeah, okay, but what about the people, the thousands of companies that have already are compliant? They're ready to go. They're ready to plug in. And it's all it is like, oh, listen, we need our cut, and we're going to do whatever we can to slow it down, and that's, again, that goes hand in hand in what you're talking about. They're going to have, we're going to give you some ability to have some banking services as long as we get our chance to have a piece of your digital asset pie.
Well, yeah, the banks are not going to be taken out of the picture because they're too entrenched in the financial system, right?
Mm-hmm. To Ripple's point, why they've worked with the incumbents from the beginning, because they know that they need to be a part of this.
Yeah, mm-hmm. Absolutely. And just a comment that I was thinking of while you were talking is that Ripple has done more for the system in this this change in the new monetary policy into the digital world than probably any other company out there, because they created the ILP and they made it public, and then now they're creating PayID and they're making that public so everybody can use it. I mean, they've done more to try to stimulate this digital economy, I think, than any company out there in the entire world. Just a real, I'm just amazed at what they've done and what they've been able to accomplish. And a lot of it is extremely altruistic, because, I mean, they're not going to benefit financially, but they're just boosting the entire ecosystem. And one of the things that, and just my comment on what you're talking about and Jim is talking about, is that you've got the new fintechs that could provide some financial services, that maybe they're federally chartered to do that. Then you've got the incumbents, the banks. Well, the banks, so the fintechs are allowed to play in that sandbox, and you got the banks. They're not going to be left out of the picture, and that the commonality between the two of them, I think, is going to be PayID. Uh-huh. PayID is kind of like that. That's where the existing banks are going to be allowed to allow customers to be able to transfer digital assets from one person to another within the banking system without having to learn private keys and all this other stuff that has really, I think kept a lot of people out of the market. Once PayID, once all the banks are on board with PayID, it's going to be as simple as sending, me sending you based on that just looks like an email address. And that's where the incumbent banks are going to be able to participate in this new financial system in a very easy way. And of course, they're going to have the custody for it too. So they've got the PayID, make it easy to transfer payments. They've got the custody solution in place. And I think that's just going to be gigantic, very similar to what happened to the internet back in the early 1990s, is when in the early 90s, you didn't have a browser. You had to use command lines, and you had to use all kinds of different protocols in order to access the information on the internet, like Veronica, Gopher, all these other protocols. Well, as soon as the web browser was created, I think a lot of people assumed that the web browser is as old as the internet itself, but it's not. Email was actually the first protocol developed on the internet. And the web browser came much, much later, 30, 40, 50, 30, 40 years later. And so once you had that, you had a graphical user interface, something very, very easy to use. All you had to do is go to, at the time, Alta Vista or one of the other search engines, type in what you wanted on a web browser, and it made it very easy to search for websites. And it also made it very easy for companies to be able to create web pages so that people could find them. Well, PayID is the same thing here. It's going to make it very easy for consumers to use digital assets. And it's really, I think it's going to create the catalyst. It's the catalyst for mass adoption of digital assets.
I think you nailed it. I absolutely agree with you. It is the glue between the new market, the new financial system, or rails, we should say, the Internet of Value, and the traditional legacy firms that are out here, especially the banks, that obviously, let's face it, they're not innovators. They never have been. And this provides them with something that creates not only a solution, but to what you just said, Dave, is it's not just a solution. It's a smooth, ubiquitous experience as a solution. And it's very, very familiar to a consumer who is not a speculator like us in this market. And that's where they need to hit it home. And I think they've hit it over the ball, out of the ballpark with that one. Now, here's another area that we need to see happen, and it is happening. We talked about the OCC. We talked about the digital dollar project, right? We talked about the federal charter and the opening of these regulatory hurdles and bringing them down and allowing this fintech and non-financial institutions to come in and play in this space, which obviously sounds a lot like a new framework for a regulatory sandbox to me. The other area of interest here is two interests here, right? Really three, and that is custody, which you touched on about PayID, and we know PolySign will play a role in custody as well. The other one here is liability, right? The liability issue for this new payment rail, whether it's XRP or something else, who's liable while it's on this payment rail? Well, back in May, we saw Consumer Financial Protection Bureau come out and release that paper that talked about remittances, how Ripple and XRP were a solution to this new financial system, open banking platform and open payment system. And I'm paraphrasing here. But the reality is they are cited greatly through that document. That document becomes effective July 21st, 2020, where it's in concerns to remittances for banks and credit unions and places like that. And now, do they start using it on July 21 or July 22? I don't know, and I'm not trying to be an alarmist to say that they will and the price is going to go somewhere. But what I'm suggesting is that to look at all of these things that we're discussing today and to see that there is clarity, not on the designation per se of whether XRP is an asset from these agencies yet, because we're not there yet, but we've got it from Giancarlo. However, I think we're seeing clarity for a new framework of a regulatory sandbox from these intertwined agencies. And that is hugely important, whether it's, XRP or the whole crypto space. And I believe that, if you understand XRP Ledger to be the universal ledger for the fiat world or crypto world or other security token offerings or what have you, things of assets of value that are tokenized, isn't this really less about XRP and more about the universal ledger, the XRP ledger? Isn't that really what we're talking about here? A new protocol for everything to run on? Isn't that the idea? Isn't that what we're saying?
I think you're definitely you're on it for sure. I don't know. We could we could speculate all we want, right, about things and how we want things to go. But I think that it certainly will serve the purpose they're looking for. And the fact that they, ILP and all that, like the ledger has the capability to do anything that they need it to do. And that's how they built it. They built it to be kind of, open source. They can, they can figure it out. They can make it happen for you. It's just the constant battle of incumbents and old ways of doing things. And everyone wants to know how it's going to benefit them in the long run. How are we going to, it's great for everybody else, but what about me? That's kind of the people that are saying that are the ones that can make it happen, can actually, allow it to happen, I should say, Mm-hmm. Once they establish that, I think we'll be in good shape. It just getting there is the hard part. I think that all of us painstakingly have been witnesses to the building of the back end of the behind the firewall stuff. All of us have been watching it happen day by day. When we always talk about the quote unquote grandmother, right? When the grandmother's ready to log on and send money, she'll have no idea how it all works.
Yeah.
99% of people don't know or care. Oh, I can send money with a PayID now and have money sent over so fast to my nephew who lives in Guatemala or whatever. Great. They don't care about all the stuff that we've lived through. And we were joking the other day on Twitter about Ken Melendez was saying, I can't wait to tell my people about how hard it was to buy XRP or be always doing things or putting stuff on a thumb drive. And you commented so did I. I was like, I often think about that, about how it used to be such a pain to buy XRP, and you had to send, buy Bitcoin and send it to Binance and then buy XRP and then check even though you're copy and pasting, you're checking your tag address 4 or 5 times to make sure your money was going to a certain place.
Or even worse back in September of 2017 when I first started buying XRP, I had to buy Bitcoin first and convert it to XRP.
You had to buy Bitcoin.
So I had to do that. It's like, and the first time I did authentication on, I remember this is so funny. The first time I did authentication for my, it was Bitstamp. It was the only exchange I could use at the time, being in New York. And my son says, "Oh yeah, you got to set up an account at Bitstamp." And so I go to Bitstamp, and like all of a sudden the authentication thing pops up, and I'm like, "What the hell is that?" And he goes, "Dad, you got to go on your phone and do the authentication thing, the
little two-factor, right?
The two-factor." And so I'm like typing in the numbers real slow, and all of a sudden it changed. It's like, what the hell? Hey, wait a minute. It happened too fast. I can't be that fast.
That's hilarious.
I know how to do it, but it was so funny. It's like that adoption. It's like kind of like getting used to the system, and it's like all these steps that you had to go through, and you had to remember your Bitcoin address, your XRP address, and then I had to get a ledger and put that, and I tried to figure that out. Well, once all those barriers are removed, you're going to have just crazy adoption across the world. I mean, it's just, and that's where this PayID thing comes in. It's so beneficial. It's just incredibly beneficial.
It really is.
You think about what you had to go through just to buy XRP or any digital asset, just a few years ago.
Do you remember the first time someone explained it to you though?
Yeah.
I'm like,
yeah, my son explained it to me. It's like, it's like, what am I buying here? What is this digital? Right. Do I see it? I can't hold it. I can't even see it.
That's the best part. Like,
it's a number. That's all it is.
At least you had, your background had the technological
Yeah, I've been on the internet since the early 90s.
You talk to somebody that's the cash holders. They're like, but I can't hold it. I can't touch it.
Yeah.
I go, and my point's always been, you use direct deposit. You pay your bills online? Yeah.
Or just take out a dollar bill and look at it.
Yeah.
There's a number on there. That's all it is. It's a number.
You know, it's so funny that you guys say that. I mean, I'm thinking of all the times I've talked to people that were friends or family, and I specifically remember telling somebody who was a friend of mine, and I'm in the middle of telling them how to do all of this. You know, you got to go on, you got to buy the Bitcoin, then in the Bitcoin, you transfer to XRP, and then I get the, whoa, hold up. Hold up. So you're telling me I got to give my real money for the fake money that I can't see, but I'm not done yet. And then once I get it for the fake money, you want me to go take that fake money and go buy another fake money on another exchange. He's he laughed at me for a half hour.
You do. Yeah. You're on it. You got it. Yeah.
It was like, yeah, that's how you do it. And they're like, yeah, I'm not doing that.
Yeah. The only way I can explain this to people is to tell them to take out a dollar bill out of their pocket and look at that serial number.
Yes.
Well, when you transfer XRP to Bitcoin or anything else, you're just transferring that serial number. That's all you're doing.
100%.
Give me that dollar bill in person if you want to. Just hand it to me. Now I've got that serial number. Nobody else can make another serial number with that dollar bill, with that, printed on a dollar bill. Otherwise, it's a counterfeit. It's a forgery, right?
That's exactly right.
Well, that's why you have a unique number for XRP. You have a unique address, and each one of those is based on your private key, which is just a set of, words and numbers that identify you as a holder,
creator, right,
as the holder of that digital asset.
Yeah. And
so it's the same thing, only in digital format. And you
said.
Can't counterfeit it. That's the beauty of the ledger.
And this is right, exactly. And this is why I got into this initially, was because of how difficult it was to happen, because I'm only 36, right? So I missed the internet age in the beginning. I was too young. I missed all that stuff, And I remember the first time.
Are you calling me old?
I remember.
Me too.
I'm just saying, like, you guys, you had the experience, right, of living through. When I first met Dave, I said, we met up. It was kind of weird, like internet meetup thing, and we're like, you don't know who you're gonna meet, whatever. It was funny because we found out we lived, 5 miles from each other, So it's like, well, I asked him. I said, you have the experience. I said, what were you doing during the Apple and during the Microsoft and during Amazon and during all these crazy things were going on? What were you doing? And he goes, it's one of my biggest regrets ever, was not investing in these things. And he was in it. He was in the internet stuff. He was about it. And I said to myself, and I remember the first time I called into your show one time, we were joking around, and I made a joke about the old law firm. What was a law firm we joked around about all the time back in the day about they were the company was gonna help you with a class action lawsuit against Ripple.
Oh, I can't remember.
It was two names.
Oh yeah, that
was
right.
Names.
I remember that guy.
It was the same name twice. I can't remember what it was though. Anyway,
Dumber and Dumber.
Yeah, whatever. Was it Scott and Scott?
Scott and Scott.
Scott and Scott. Yeah, can't make it up.
I called. I said, I don't want to be the guy who knew about it but didn't act on it, and I'm okay with losing my money over that. That's the whole thing with me. I'm okay with losing my money over this thing, because I'm not going to look back. And I asked my father the same thing, God rest his soul. I said, where were you during? He goes, Jim, I have no idea. I don't remember. I was too busy trying to make money to raise a family. I get it. And we are blessed in this generation to be able to talk to each other like we are right now, to be able to share ideas and thoughts and have access, and people that are doing the deep dives on stuff, the Mickey B's and Stuart XRPs and these people. We had this conversation before, like, as a community, we're able to be able to know all this stuff. I don't blame you guys during that time frame, because there was no way to know. It was blind. You were investing blind in companies about things that we are able to. We're looking into the friggin' daily planner of the SEC getting at White House. I mean, come on. You guys didn't have that ability, but for me, for my family, the responsibility is on me to say, I took a shot, man. I took a shot. And I'm not going to be the one looking back saying, damn it, I should have, I can't imagine in 20 years from now looking at XRP price and it being 10 grand and I didn't buy more. I was bitching about 17 cents prices.
Well, I was so busy in the 90s and the early 2000s building my own business. What did that was where I invested. I invested in my own business.
Yeah.
So the internet thing. I knew the internet thing was going to be big, and I built my business on the internet. So I actually did take advantage of it. Right. I just didn't invest in the companies that were up and coming. But of course, we didn't have the information that we have today. And so if you do a little, just a modicum of research on what's going on in the digital asset space, you're going to realize that there are so many parallels between now and the internet, in the beginning of the internet, that you can't ignore it at this point but you know what? There are hundreds of thousands, if not millions and millions of people who still have not heard about digital assets.
That's right.
They're
Absolutely.
There, if you're not plugged in, if you're not, and that's why I thank my son so much for telling me all about this thing, because otherwise I wouldn't have been in it either.
Yeah.
And it takes somebody to tell somebody about it.
It's very, very easy to go along your everyday life and not know anything about anything.
Nothing.
It is very easy just being, and you know what? If that's the world you want to live in, that's your world, man. Do what you got to do. But I got into this in the beginning for generational wealth, and I'm not leaving until I got it.
I love that. That's a final thought right there. Dave, let's have yours.
I came in for the money, but I stayed for the tech because honestly, I love it. I love to talk about it. I love to be about it. I love to learn about it. To me, it's to be on the ground floor,
man.
right?
It's
to be on the ground floor of something that's going to be, at the end of the day, it's going to be world changing. These guys, everybody in the community, not just Ripple, everybody, all these people are changing the way money is sent around the world. And that's one of the most important things. Banking the unbanked, all that stuff like that. There's nothing more important than that. Giving people freedom of their own money. And along the way, we're going to lose some of the freedom. That just is what it is. If you want to have the big players come in, big brother's coming to put a thumb on something. But at the end of the day, it's going to be a better thing for everybody.
My closing thought is this. I heard this guy talking about the fact that he said that he had this dream. He went back in time to the 1880s. And he's like in his hotel room, just sitting there. There's no TV. There's no internet. There's no mini bar. there's like nothing. It's quiet as can be, and he's bored out of his mind. And everybody dreams about the fact, the 1880s, that was like a golden age. The 1900s, seeing all the technology changes and how wonderful it was to live back then. Until you go there and you realize that it's as boring as hell, and you come back here and you realize that what the advantages we have of living in this age of communication, and then when we go into the age of instant payments, it's just going to be absolutely amazing. It's an exciting time to be alive, and thank God I can see it.
Absolutely, and well said by both of you for final thoughts. I'm going to final thought this thing and say that, this has been one of the best conversations I think we've ever had in covering and going into what's taking place, really shining a light on everything and just trying to keep a broad view of the crypto space, whether that's talking about regulation changes or the growth of XRP or the growth of the pursuit of the digital dollar. I'm just fascinated by both of your insights on the matter. And one other itch that I can't quite reach is that just recently, as a final thought here, I want to let everybody know to keep a real eye on this. The BIS, which is the central bank of central banks, and the Federal Reserve, which is the biggest central bank, have joined together in a relationship, and it is to work on innovation of fintech and financial payment system. And I tell you, first thing comes to my mind is banks are not innovators. So the fact that these two big boys have gotten in bed together for fintech and innovation for a financial payment system, this is pretty damn encouraging, knowing that we've got all these conversations about the digital dollar and everything else that Ripple and XRP can do as well. So that's my final thought on the matter. Guys.
Well, I just want to say, thank Jim for joining me today.
100%, Jim. It's so great to see you. Yeah.
We text each other, and we stay in touch with each other, but it's nice to see him in person.
It is.
And I want to thank you for continuing this conversation about digital assets, because to tell you the truth, even if we only reach one new person today, it is totally worth it, because just like my son introduced me to digital assets, if we introduce one person to digital assets and that light bulb goes off in their mind, it's totally worth the hour that we spent.
I feel the same exact way, and obviously I'm grateful for the both of you, and I'm so glad that you both and your families are healthy and safe during this time. Stay that way. Keep vigilant till they get this thing figured out. And you know what? Until we meet again, let's do it again next Friday, guys.
Sounds good to me.
Good to me.
All right, take care. Have a great weekend, everybody. We'll talk soon.
You too, my friend.
Take care.
All right, take care.